Hey everybody, how you doing? Derek Nelson here once again. I want to talk to you today about how to pay down your consumer debt without taking any additional money out of pocket. Woo! This is going to be fun. I hope you get excited. I'm really excited to show you this. It's so simple. By the way, if you find value in this, please share this with people that you know. Hit the subscribe button if you're watching this on YouTube, and don't be afraid to follow me. Social media, my handles are very simple. On Facebook and Instagram, you have Polaris Financial Network. Also on Instagram, you can follow me on my personal, which is Derek_Nelson_. So hit the subscribe, share it, and please comment. I want to hear from you. I want to know what's going on, and I want to have the ability to help you out and become debt-free and truly wealthy. So let's talk about debt, consumer debt. There are many forms of debt. You know, you have your mortgage, you might have car payments, you have credit cards, and it's really like the credit cards and the car payments and those types of debts that I want to focus on, because oftentimes they can bring double-digit interest rates. And so I have a lot of clients who will be putting money away for savings, you know, a couple $100 a month or what have you, but at the same time they're racking up credit cards. And there's a disconnect there, because if you're hoping to earn 4, 5, 6, even 8% in your retirement plan, but you're paying out 15 to 20% in credit card interest rates, the math doesn't work and you'll never get ahead that way. So we know that having too much debt is weighing us down. We understand that it's taking money out of our pocket. But do we really have a grasp on its economic impact? So I put together this slideshow for you so that you could totally get it. You could see it right there. It's as plain as day. And I'm going to show you a particular situation that's probably not that much different from yours, or at least somebody you know. And hopefully this gives you some guidance onto how you can accelerate your payments without taking any additional money out of pocket. So here we go. All right, so here we are. I'm going to show you exactly how to pay your debts off at lightning speed, what it's actually going to be costing you if you don't do it. Okay, and I want to show you how to accelerate your debt payments without taking any additional money out of pocket. So this is a real scenario. Okay, this client, who, you know, obviously will go unnamed, and I mashed up some of the companies and what have you just for those purposes, but these are actually real numbers. All right, these are real numbers, the real balances, the real interest rates, and the real payments. Okay, and this probably isn't a scenario that's all that much different from, you know, you have or maybe somebody else that you might know. But at the end of the day, if you scroll down to the bottom, their total balances are over $65,000 with an average interest rate of 16.3%. And they're paying almost $1,518 every single month to these loans. Okay, I mean, it's really tying them up. They don't have any extra money at the end of the month. Sometimes they're short, and that's, you know, hence why they have some credit cards. But, you know, they've also made some judgmental errors. Which, hey, listen, I've done it, you've done it, we've all done it, right? The main way that I learned how to do this so efficiently was by my own past mistakes. So don't think that I'm sitting up here on my high horse. I've been there, done that, and that's how I got efficient at paying off my own debt, and why I became so passionate about helping others. So let's get through here right now. So basically, if they continue the way that they're going, it's going to take them 16 years and 9 months just to pay off the credit cards. I'm not even including the auto loan debt. Now, the auto loan debts were 6-year loans, but the credit card debt is going to cost them $10,391 in interest. Now, if you add the auto loans, the total debt that's going to cost them is $13,884. Okay, so they're going to pay a total of $24,275 and change in just interest. Think about that. What would you do with an extra $24,000 and change in your pocket? Okay, this money is so much better served in your pocket rather than a lender. So we want to be able to flip this around. We want to be able to put money back in your pocket, and let's show you how we're going to do that. Again, what can be done, right? We have no extra money, right? We're laying out over $1,500 a month just to pay down these debts. We have no extra cash flow. How the heck are we going to actually pay this off early? All right, we found money for them. It turned out, all things being equal, they were putting away $300 a month between the two of them, so it doesn't seem like a lot. But between both of them, they were putting away $300 into their 401ks. All right, and then we were also able to save them some money on their home and auto insurance. They saved about $70 a month in the auto and $14 and change for the homeowners, which that's paid annually. But I just broke it down just to give you an idea. So in total, we saved them $384.16, and they were willing to pledge $250 of that to accelerating their debt payments. Okay. We wanted to keep a little extra money in their pocket, just to make sure that they had that, and it was more of a comfort level. By the way, if you're accelerating your debt payments and you have an emergency, right, and you need these that extra $384, let's say, you can pay the minimums for a month, right? Like, their credit cards aren't going to call you because you didn't make an extra payment. So if you're in a jam, you do what you got to do. And it's happened with my clients, and what they'll do is they'll call and they'll say this, this and that, and we'll get them right back on track. It's not a problem. But the way that this plan was devised was according to the highest APR. That's the annual percentage rate. That's how the costs are associated, in addition to the interest rate. So we're going to stack those payments, which I'll show you in a moment. They're going to end up saving over $13,900 in interest. And here's the beauty of it. They'll be debt-free in December of 2023 rather than 2037. Think about that. If they're on the credit cards, if they're just making the minimum payments, they will not be debt-free until the year 2037. We have them debt-free in 2023, including the car loans. So what I did was I mapped out a plan here. Okay, and I moved this so it was appropriate for this illustration. And we took that $250 and we applied it to the minimum payment of the Capital One, if you could see that. So starting in June, you see that payment of $341. And that payment continues all the way through February of 2021. And then in March, there's only $36 left to pay off the Capital One bill. So we apply the balance of that to the Kohl's card. Now what we're doing is stacking, because if you look at it appropriately, we got the $341 plus the $57, which was the Kohl's minimum, and starting in April, it becomes $398 to pay down the Kohl's, and then by June of 2021, you see that there's $36 left on the Kohl's card, and in July that's saved. So now we take that Chase they were paying $250 on, and then we take that $398 and we add it to the Chase card. So now they're paying $648. So you get the idea here, and you see how it's stacking, and we're accelerating these payments. Now I'm only illustrating through 2022. There was another page. But if you go down to the bottom where it says 2022 payments, auto loan number 2, in December of 2022, that payment is $1,768. That will actually continue. The $1,768 will continue through into 2023. Okay, but they will be done. They will be done. And I think they have one payment in January of $162. And they're completely debt-free by January 2024. The beauty of this is that once they pay down all this debt, they have freed up an additional $1,768 for their own pocket. Now that they have that $1,768, now we could turn around and start building that nest egg. So in 5 years' time, they're going to save over $106,000. And in 20 years, they're going to save over $424,000. Now think about this. In 20 years, if they just earn 3% compounding interest, they will have over $701,000 in the bank. Think about that. Now, in addition, during that time, we are saving this in a cash value life insurance policy. And the reason we're doing that is, one, if they pass away, the beneficiary will get what they meant to save over a lifetime, over that 20 years at least, right? They will have access to that money without any IRS restriction or penalties. They will become their own bank. So when it's time to get that new automobile, they will borrow the money from their account. So there's more details to it, but just to make things simple, they're going to borrow money from the insurance company. Okay, their cash value does get reduced, but they will earn interest as if they've never touched the money. And that's a whole nother conversation. That's another video which I will put together shortly. But in essence, what I'm getting at is that they will never pay interest to a lender again. Now, we didn't talk about the mortgage. That was something that they decided they were going to keep making the mortgage payments. That's fine because they weren't sure if they were going to move or what have you. So this is based off our conversations. Could they change their mind and start some sort of a mortgage acceleration program? Absolutely. If it makes financial sense, we will absolutely do that. But here's the thing. When it comes to credit cards, auto loans, and listen, let's face it, we all finance our cars, right? If you could self-finance and have that money back at the end, how much peace of mind would that be? You're never going to make another interest payment. All this money goes towards your future. So it's pretty simple. If you want to have a conversation about this, and I can't imagine you don't, this is all my contact information. In the comments, I'll put the link for my calendar. You're not ready to chat, just follow me on social media. But this is so huge. You're going to be able to accelerate your savings plan. We just have to get rid of that debt, and we have to do it efficiently. That's all, right? So again, follow us on social media. Do whatever you have to do to get yourself out of debt as quickly and as efficiently as possible. And I am 100% here to help you accomplish that. And there you have it. So I hope you truly understand the economic impacts of paying down debt by making minimum payments, what car payments are really costing you, and what debt is really going to cost you over the long term. I want you to flip that script. I want you to turn it around because I showed you, I saw what you could do, how much further ahead and how fast you could accelerate your savings without risking the money, which is earning a low interest rate, how much better off you'd be over the long run. So if you're ready to get started today, you could reach out. I mean, you could text me. I gave you my phone number. It's 727-902-1083. If you're not ready, just go down to the comments. I'll give you the ability to schedule a call with me. There's never any cost or obligation to have that initial conversation with me. Feel free to download my book for absolutely free, or you can go on Amazon and buy it. It's the Financial Foundation System. Either way, I'm here to help. Be sure to follow me on social media, and I want you all to just live debt-free and truly wealthy, and I cannot wait to hear your story. You take care. Have a great day. Bye-bye.